All right, here's the afternoon update. It is Tuesday, October 8th, and just giving you a storm update. I happen to be in Pompano Beach. I had to evacuate yesterday from my house in Southwest Florida. I'm right on the border of Punta Gorda, and so the storm shifted a little bit. It's still on track, but it had a little bit of a southeast shift. It has regained its Category 5 status, storm surge expectations. I heard one thing, that in my area, I was evacuated because I'm in evacuation zone A, which is obviously, that's the first one that's going to get evacuated. They're saying that the storm surge could be as high as the roof of my house. I have a one-story house, and so if that happens, that's it. I mean, the house is done. It's going to have to be ripped down, whatever's left of it. So catastrophic. Not really focusing too much on the markets right now, as you could imagine. I did see something today in the API oil inventories that came out after the close, up 10.9 million barrels. Tomorrow we get the EIA weekly petroleum status report. And you can't really read a lot into these reports because they've been, it's been affected already from Hurricane Helene. It's going to be affected from Milton. But you had a huge build in crude inventories in the API. We had a sell-off in oil today. Markets have been looking at oil as kind of like an inflation indicator. I don't think that's really accurate right now because everything's getting skewed by these storms. There's been a panic basically in the bond market over the Fed maybe not cutting interest rates at the November meeting. I saw today, at least early today, that probabilities were up around 13.4% that there would be no rate cut in November. And that's basically from a 0% probability a week ago where nobody thought there would be no rate cut. I mean, the market was really kind of bouncing back and forth between a 50 basis point and a 25 basis point. Then we got that hot jobs report last Friday, and it went down to a 25 basis point cut, and then everybody was freaking out. A lot of speculative selling in treasuries, and that kind of upped the probability of no rate cut. This is the thing I've been saying to you guys for a long time. Following this kind of manic behavior of the monetarists, where single thing is focused on monetary policy without even the correct understanding of the impact that has on economic activity. Actually, they have the opposite understanding of what that has. That's why they got it all wrong during the rate hike cycle, when that was very bullish for the economy. The stock market made a new all-time high, like I told you guys. But this kind of manic behavior, ping pong, bouncing back and forth every single day. Is the Fed going to do this? Is the Fed going to do that? That is not a recipe for success. You want to go against that emotion. I think the bond market sell-off has gotten really ahead of itself, I just think it's wrong, okay? I'm sticking to my original or my outlook, which has been that way for a while now, that we're going to come into an increase in fiscal drag, if not from the rate cuts. We had the 150 basis point. The Fed's going to cut. They might hold off in November. I don't know. A lot depends on the inflation number on Thursday. We're getting CPI on Thursday. If it's a hot number, they're going to hit the bond market again. But the point is, 2025, as I've been telling you guys, unless there's some policy changes, you got the expiration of the Trump tax cuts, you have smaller increases in Social Security, Medicare, Medicaid, all that stuff. You have what will be further rate cuts by the Fed. You got global rate cuts. You got the Bank of China, Bank of Canada, Australia, the UK, the Swiss. Everybody but Japan has been cutting rates, so that's like a global contraction in fiscal. It takes a little time for that to cycle through the global economy, but it's the exact opposite of what happened with the rate increases that started in March 2022, which supercharged with those interest income flows into the economy. You're not going to have that now. That's being siphoned off, and we're coming into other elements of fiscal drag. So I'm sticking with the outlook there. Anyway, Gold was down today. It hit a support level, I would say, not I would say, but we've seen some producer short covering, producer buying on the pullbacks at 26.50 and below. I think we got down low 26.30s or even 26.20 something, and then I think it's going to hold here for now. The bigger picture outlook on gold, with a slowdown in economic activity, it's not bullish. You got a very high short position by producers in gold, banks extremely short on the gold market, and I think that portends more for a longer term correction once it gets going. Right now it's all speculative activity. Anyway, my thoughts obviously are on my house and the hurricane and other people affected by that in Florida. It's going to be disastrous. They're saying it's probably going to be the most powerful hurricane ever experienced in the state of Florida. So it's a catastrophe. Nothing more I could say. Talk to you guys tomorrow. Please like and subscribe. And if you get a chance, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.